Welcome. If you're new to investing, you've probably heard about ETFs or exchange-traded funds. They're one of the simplest ways to start building your investment portfolio. In this video, we'll break down what ETFs are, why they're great for beginners, and introduce you to some of the best options to get started. Whether you're looking to grow your savings or just want to understand the basics, this guide is for you. Let's dive in and make investing less intimidating, one step at a time. ETF, or exchange-traded fund, is a type of investment fund that's traded on stock exchanges, just like individual stocks. ETFs typically hold a collection of assets, such as stocks, bonds, or commodities, and they're designed to track the performance of a specific index or sector. This means when you buy an ETF, you're essentially buying a small piece of a whole basket of investments. It's a simple way to diversify your portfolio without having to pick individual stocks yourself. ETFs are popular among beginners because they offer diversification, low costs, and flexibility. Instead of putting all your money into one company, you spread your risk across many. Plus, ETFs usually have lower fees compared to mutual funds, making them cost-effective. You can also buy and sell ETFs throughout the trading day, just like stocks, which gives you more control over your investments. These features make ETFs a smart and accessible choice for new investors. When you invest in an ETF, your money is pooled together with other investors' funds. The ETF manager uses this pool to buy a variety of assets according to the fund's strategy. The value of your investment goes up or down based on the performance of these assets. Since ETFs are traded on exchanges, you can monitor their prices in real time and make trades whenever the market is open. This transparency and liquidity are big advantages for beginners. There are many types of ETFs to choose from. Some track the overall stock market, while others focus on specific sectors like technology or healthcare. You'll also find bond ETFs, commodity ETFs, and even international ETFs. For beginners, broad market ETFs are usually the best place to start because they offer instant diversification and lower risk. As you gain experience, you can explore more specialized ETFs to match your interests and goals. One of the most popular choices for beginners is an S&P 500 ETF. These funds track the performance of the 500 largest companies in the U.S. by investing in an S&P 500 ETF. You get exposure to a wide range of industries and some of the most stable companies. This makes it a solid foundation for any beginner's portfolio. Examples include the SPDR S&P 500 ETF Trust, SPY, and Vanguard S&P 500 ETF, VOO. Total market ETFs are another great option for beginners. These funds aim to track the performance of the entire U.S. stock market, including large, mid, and small-cap companies. This means you're not just investing in big names, but also in smaller companies with growth potential. Vanguard Total Stock Market ETF, VTI, is a popular choice in this category, offering broad exposure and low fees. If you want to diversify beyond the U.S., international ETFs are a smart way to add global exposure to your portfolio. These funds invest in companies from around the world, helping you benefit from growth in different regions. Examples include Vanguard FTSE Developed Markets ETF, VEA, and iShares MSCI Emerging Markets ETF, EM. International ETFs can help balance your portfolio and reduce risk tied to any one country. Bond ETFs are perfect for beginners who want to add stability to their portfolios. These funds invest in government or corporate bonds, which tend to be less volatile than stocks. Bond ETFs can provide steady income and help cushion your portfolio during market downturns. Popular options include iShares Core U.S. Aggregate Bond ETF, AGG, and Vanguard Total Bond Market ETF, BND. Dividend ETFs focus on companies that pay regular dividends. These funds are great for beginners who want to earn passive income while investing. Dividend ETFs typically include established companies with a history of paying out profits to shareholders. Examples include Vanguard Dividend Appreciation ETF, VIG, and iShares Select Dividend ETF, DVY. They can be a reliable source of income and growth over time. Sector ETFs allow you to invest in specific industries, such as technology, healthcare, or energy. These funds are a good way for beginners to explore areas they're interested in, while still enjoying the benefits of diversification. For example, Technology Select Sector SPDR Fund, XLK, focuses on tech companies. Just remember, sector ETFs can be more volatile than broad market funds, so start small if you're new. One of the biggest advantages of ETFs is their low cost. Many ETFs have very low expense ratios, meaning you keep more of your returns. Vanguard and Schwab are known for offering some of the lowest cost ETFs on the market. For beginners, choosing funds with low fees can make a big difference in your long-term results. Always check the expense ratio before investing. Buying ETFs is straightforward. You'll need a brokerage account, which you can open online in just a few minutes. Once your account is set up, you can search for the ETF's ticker symbol and place your order, just like you would with a stock. Most brokers offer commission-free trades on ETFs, making it easy and affordable to get started. Remember to start with small amounts as you learn the ropes. Before you invest, it's important to set clear goals. Are you saving for retirement, a home, or just looking to grow your wealth? Knowing your goals will help you choose the right ETFs and decide how much risk you're comfortable with. Beginners should focus on long-term growth and avoid chasing quick gains. Setting a plan will keep you on track and help you make better decisions. Dollar cost averaging is a smart strategy for beginners. Instead of investing a lump sum all at once, you invest a fixed amount regularly, like monthly. This approach helps reduce the impact of market ups and downs, since you buy more shares when prices are low and fewer when prices are high. Over time, this can lead to better results and less stress about market timing. As your investments grow, it's important to rebalance your portfolio. This means adjusting your holdings to maintain your desired mix of stocks, bonds, and other assets. For example, if stocks have grown faster than bonds, you might sell some stocks and buy more bonds to get back to your target allocation. Rebalancing helps manage risk and keeps your investments aligned with your goals. ETFs are known for being tax efficient. Thanks to their unique structure, ETFs often generate fewer taxable events compared to mutual funds. This means you can keep more of your returns over time. For beginners, this is a big advantage, especially if you're investing in a taxable account. Still, it's a good idea to learn about capital gains and dividends so you're prepared when tax season comes around. Beginners sometimes make mistakes like chasing hot trends, ignoring fees, or not diversifying enough. It's important to stick to your plan, focus on low-cost, diversified ETFs, and avoid emotional decisions. Remember, investing is a long-term journey, not a get-rich-quick scheme. Learning from others' mistakes can help you build a stronger portfolio and reach your goals with confidence. There are plenty of resources available to help you learn more about ETFs and investing. Many brokerages offer educational tools, articles, and videos. You can also find books, podcasts, and online courses tailored for beginners. The more you learn, the more confident you'll feel about your investment choices. Don't hesitate to take advantage of these resources as you start your journey. Consistency is key to successful investing. Make regular contributions to your ETF portfolio, stick to your plan, and avoid reacting to short-term market swings. Over time, your investments will benefit from compounding growth. Even small, regular investments can add up significantly. Stay patient and keep your long-term goals in mind as you build your wealth step by step. To wrap up, ETFs are an excellent choice for beginners thanks to their simplicity, low cost, and diversification. By starting with broad market or S&P 500 ETFs, setting clear goals, and staying consistent, you'll be well on your way to building a strong investment foundation. Remember, investing is a marathon, not a sprint. Keep learning, stay patient, and let your money work for you over time.